Warren Buffett, investor extraordinaire and unarguably one of the very best investors of our time. His business acumen, understanding of the market, and consistency in picking the right investments have seen him crowned the Oracle of Omaha, and he's got an impressively stacked portfolio to prove his expertise. Let's take a deep dive into his 25 most important investments. In 1966, Buffett and Charlie Munger, the future Berkshire Hathaway partner, started diversified retailing. Just a year later, they bought Associated Cotton Shops for $4 million, which Buffett claimed was about 11% of his total net worth at the time. Buffett himself has admitted that retail investing is his weakness. The billionaire has credited the success of the store chain to the company founder, Benjamin Rosner. He knew little about retailing and had used flattery to keep the founder from retiring. The capital cities ABC merger remains one of the most unexpected successful business moves in American history. When the merger was announced in 1985, it was the largest non-oil merger up to that point. Buffett was instrumental in the $3.5 billion merger, providing $516 million through Berkshire Hathaway. He had invested 17% of his stake in Berkshire, receiving 18% of the capital cities/ABC shares. In 1993, he sold 1/3 of his holdings, which raked in $600 million. The remaining shares would earn him $2.6 billion when Capital Cities/ABC merged with Disney in 1996. We, of course, have no special insights regarding the direction or future profitability of investment banking. By their nature, the economics of this industry are far less predictable than those of most other industries in which we have major commitments. Those were Warren Buffett's words in his 1987 annual shareholders letter. Berkshire Hathaway had purchased a 12% stake in SALOMON Brothers, which was an unusual move for Buffett, as investment banks were outside his circle of competence. His ownership of the company would eventually rise to 20%, and his total return from the investment would be 150% when Travelers Group bought the company. Warren Buffett's purchase of Scott FETZER was the first time he acquired a conglomerate. It was a $315 million deal, and he had to invest 10% of his net worth in the acquisition. It turned out to be a profitable endeavor. Scott FETZER would turn over $1 billion for Berkshire within the first 15 years of purchase. Here is one of the biggest investment returns for Warren Buffett on this list. In 1978, the Oracle of Omaha invested 17% of his net worth in buying 6% of Safeco shares. Like Salomon Brothers, Safeco was an insurance company, and the investment would suffer from the same fluctuations that afflict insurance companies. However, Buffett had made a safe bet, and he reaped 50% in returns when the company was sold in the early 1980s. It took Buffett 52 years from drinking his first Coke in 1935 to buying his first shares in 1988. It was his biggest mistake of omission, for while he ignored it, Coca-Cola grew into a multinational. Nevertheless, Buffett salvaged his fortunes from what he had left. He bought 6.2% of Coca-Cola stocks in 1988 and had raised it to 7.8% by 1994. Berkshire currently has a 9.2% stake in the beverage giant due to Coca-Cola repurchases. It is worth over $22 billion, a 1,550% return on a $1.3 billion investment. It was 1977, and owning a market-dominant newspaper was a ticket to financial utopia. Warren Buffett knew this and made an astute investment of $10.9 million in the Washington Post for 9% of its shares. Fast forward to 2014, and Buffett sold a hulk of his shares for $740 million. He had ended his 40-year run as one of the company's major stakeholders and made over 70 times his initial investment. The share sale was prompted by Amazon founder Jeff Bezos' buyout of the newspaper. Through his defunct company, Blue Chip Stamps, Buffett bought shares in the Buffalo Evening News for $35.5 million. Adjusting for Buffett's increased ownership in Blue Chip years later, the purchase was 22% of his net worth. The Buffalo Evening News would run into murky waters after Buffett joined its board, but in the end, it was a profitable investment. After fighting its competitor, the Courier Express, for market share, it went from a $1.2 million pre-tax loss to a $19.4 million profit in 1983. At age 47, Buffett set his eyes on KAISER Aluminum and Chemical and bought his first shares. 2 years later, he had spent $20.6 million on approximately 3%. His purchase was motivated by KAISER's ridiculous price-to-earnings ratio of 4. Buffett's usual preference, until the 2000s, was undervalued companies. He held KAISER stocks for 4 years and got a return of 35%. It was a good profit, but not Buffett's standard good. Pinkerton was the largest uniformed guard service in the US. When Buffett purchased the company, he made the $24 million acquisition through Blue Chip, and he had to stake 19% of his net worth into it. Blue Chip sold the company in 1983 to American Brands for $162 million. Buffett received a return of 150% from the sale. Before Berkshire Hathaway and Blue Chip, there was BPL. And before Buffett began to hold stocks forever, he made the costly mistake of selling Disney stocks after just 1 year. In 1966, the Berkshire CEO bought 5% of Disney stocks for $4 million through his company, BPL. The share price doubled within a year and gave him a 55% return when he sold it. Today, the same 5% stake is worth $12.3 billion. 3 decades later, he got a second chance with Berkshire Hathaway. In 1995, the company acquired 3.6% of Disney shares and $1.4 billion in cash in the Disney Capital Cities merger. 3 years later, Buffett sold the stocks, which are now worth $8.9 billion. Altogether, Buffett lost over $20 billion. Buffett bought ExxonMobil shares twice, and both times he held them for relatively short periods. His initial investment was in 1984, when he bought 46% of the company's stocks for $173 million. He had staked 12% of his net worth on a $20 billion oil company. He sold his shares barely a year later and got a 30% profit. In 2013, he bought 0.9% of Exxon shares for $3.45 billion. He held the shares a little longer this time, but eventually dumped them in 2015, an action that left several papers speculating on what his reasons were. Formerly known as Burlington Northern Santa Fe, BNSF Railway is one of Berkshire's Big Four. Buffett owns 90% of the company, and it has repeatedly raked in $6 billion annually. Compared to most of Buffett's holdings, BNSF is a new acquisition. He began buying the company's shares in 2006 and gained control by 2010. A total of $33 billion was invested in the company, which was 19% of Buffett's net worth at the time. In 1976, Berkshire Hathaway's initial investment in GEICO, the fourth largest auto insurer in the US, with a market share of 4%, cost $47 million for 33% of the outstanding shares. By 1996, GEICO had repurchased shares, increasing Berkshire Hathaway's ownership to 50%, before selling the second half to Berkshire Hathaway for $2.3 billion. Today, GEICO is the second largest auto insurance company in the US, with a market share of 14%. Warren Buffett made his General Foods investment early in his career. General Foods was a leading food and beverage company. Buffett saw value in the company's strong brands. Berkshire Hathaway acquired $1 billion worth of preferred stocks in General Foods. In 1985, the company merged with Kraft, another leading food company, to create Kraft General Foods. By investing in preferred stock, Warren Buffett minimized his risk while still earning a good return. WESCO Financial was a holding company that owned a range of businesses. Buffett became interested in WESCO Financial in the 1970s and began investing in the company's stock. In 1983, Berkshire Hathaway acquired a 50% stake in WESCO Financial. This made Buffett the chairman of the company's board of directors. Under Buffett's leadership, WESCO Financial continued to grow and diversify its business holdings. In 2011, Berkshire Hathaway completed its acquisition of WESCO Financial. The deal valued the company at $6.7 billion. The acquisition allowed Berkshire Hathaway to integrate WESCO Financial businesses into its operations fully. National Indemnity Insurance was a struggling insurance company based in Omaha, Nebraska, facing financial difficulties. However, Buffett saw potential in the company's strong management team. Berkshire Hathaway acquired the company on March 9, 1967 for $8.6 million. National Indemnity has become the cornerstone of Berkshire Hathaway's insurance business, one of the largest and most successful insurance companies in the world. Illinois National Bank was an excellently run bank in the late 1960s. Berkshire acquired the bank as its second largest investment. Buffett bought about 100% of the company's shares, $18.9 million. The company cost him about 31% of his total net worth then, but became successful under his ownership. The bank's success attracted the attention of other financial institutions. In 1984, INB was acquired by the banking giant First National Bank of Chicago for a significant premium. The investment made by Buffett in R.J. Reynolds Industries during the early 1980s is noteworthy, yet it has received little attention. At the time of purchase, Reynolds was the largest tobacco company in the U.S. Berkshire and Blue Chip Stamps jointly acquired Reynolds for $270 million, equivalent to 34% of Buffett's net worth. While it is unclear when Buffett sold the shares, it is speculated that he did so when Reynolds offered to repurchase 10 million shares at $73.5 each in 1984. The returns of the deal were estimated to be around 50%, which may be underwhelming for Buffett. American Express, a household name today, was quite different over 50 years ago when Buffett first invested. The company was primarily involved in selling traveler's checks. American Express had recently launched its credit card as a defensive measure against the potential threat of Diners Club. During 1964 to 1966, Buffett purchased 5% of the company for his partnership, BPL, costing $13 million and 43% of his then net worth. The holding was sold primarily in 1967, with an estimated return of 140%. Buffett was interested in buying the stock because it was a strong business franchise that had taken a temporary hit to its price. Today, American Express is still one of Berkshire's largest holdings. See's Candies, known for selling premium chocolate, was acquired by Buffett through Blue Chip Stamps in 1972 to 1973. Contrary to popular belief, Buffett paid $34.7 million for 99% of the company, as disclosed in Blue Chip Stamps' 1973 10K report. Buffett purchased See's at a high price-to-earnings ratio of 17.5. Over the years, See's has generated over $2.3 billion in pre-tax profits for Berkshire. In 1998, Buffett's holding company, Berkshire Hathaway, acquired General RE for $22 billion. It was one of the largest acquisitions in the insurance industry at the time. Buffett's investment in General RE has paid off over the years, as the company has continued to generate strong profits and has contributed significantly to Berkshire Hathaway's overall performance. Buffett and Charlie Munger utilized blue chips as an investment vehicle to acquire other businesses due to their valuable characteristic of float. Blue Chip operated a trading stamps business in which customers received stamps when making purchases at retail stores. Buffett estimates that the purchases attributable to Blue Chip's core business, stamps and float, totaled approximately $26 million from 1968 to 1974. Despite the decline of Blue Chip's sales over time, this purchase was still lucrative for Buffett as it allowed him to allocate capital to other businesses. These investments have played a crucial role in the success of Berkshire Hathaway. Warren Buffett's investment in Apple began in 2016 when his company, Berkshire Hathaway, started purchasing shares in the tech giant. Buffett had previously been hesitant to invest in technology companies. However, he was impressed by Apple's loyal customer base, strong brand, and consistent earnings. By early 2021, Berkshire Hathaway owned approximately 5.4% of Apple's outstanding shares, making it one of the largest shareholders in the company. Berkshire Hathaway was a textile producer, facing challenges in the early 1960s. Warren Buffett began purchasing the company through BPL in 1962 to sell his shares back to the company's management. However, when Berkshire offered to buy back shares for a lower price than previously agreed upon, Buffett became upset and decided to take control of the business instead. By April 1965, BPL owned 392,633 shares, and by May of that year, they had taken control of the company. Although Buffett considered this a mistake, he eventually devised a plan to redirect cash flows into new, thriving businesses and out of the failing textile business. In 1985, Buffett decided to shut down the last textile operations. Today, a single Berkshire share costs more than $300,000, a significant increase from its 1965 price of $15. And that's it. The top 25 most important investments ever made by the great Warren Buffett. Which of these do you think were great investments and still are today? Share your thoughts with us in the comments. Like and share this video, and do not forget to subscribe.